The United States and China have come to a trade deal, a temporary trade deal, but we will see how long that lasts. And guys, there is not a whole lot of coverage on this yet and very little analysis on this yet, likely because they have not found a way to spin this against the President of the United States. So, I've got three sources here that are sort of miniature sources. Two of them are miniature sources. One of them is a decent size source, but it is mainly not analysis, but a history lesson. And after that, I have some analysis to get into. What does this mean? Where do things go from here, etc. So, from Fox Business, they did one of these weird articles that is a headline and a subheadline and then nothing. Stocks climb on China-U.S. trade progress, Trump's drug price push, live updates. U.S. stocks climbed Monday after Treasury Secretary Bessent touted substantial progress on talks the Chinese, setting up a busy week of trade talks ahead as Trump heads to the Middle East. In economic and earnings news, two key inflation reports and Walmart results. Fox Business is providing real-time updates on the markets, but they're not. Then we have from the BBC, U.S. and China agree to slash tariffs for 90 days. United States and China have agreed a temporary cut to the tariffs they impose on each other's imports. U.S. Secretary Scott Bessent said both countries would lower their recipient tariffs by 115% for 90 days. This article, for some reason, refuses to state the percentage remaining on the tariffs because from the outlook, just from the top level, the remaining tariffs, 30% the United States tariffing China and 10% China tariffing the United States. That looks like a win for the United States. That looks like a win for Donald Trump. We will get into a little bit about those tariffs in particular, but I did want to hit you with this. U.S. and China agree to lower tariff levels, 90-day pause from Emma Farge and Olivia Le Poidevin from Reuters. Geneva. The United States and China have said Monday on May 12th that they agreed to a deal to slash reciprocal tariffs for now as the world's two biggest economies seek to end a trade war that has disrupted the global outlook and set financial markets on edge. I'm not sure that's why they're doing it. I think that China is in a whole lot of pain right now, and the United States, if this is a war of attrition, will win that war. The United States is not necessarily even feeling a pinch right now, and there are reports out of China that, okay, so just to get this out there are protests, say some, there are riots, say others, there are pictures of people in the streets, and to be completely fair, I don't read their language. I don't know what they're protesting. The reporting that I have seen says that they are protesting the shutdown of manufacturing in China. There are all sorts of reports of basically empty ships that were once full with goods, etc. It would seem, if those reports are true, that China is feeling this and feeling this immediately and feeling this drastically. I'll get into a little bit later about why that is a very, very bad thing for the Chinese economy. Besides just the obvious, right? Speaking after talks with Chinese officials in Geneva, U.S. Treasury Secretary Scott Bessent told reporters the two sides have agreed on a 90-day pause on measures that tariffs would come down by over 100 percentage points to 10%. Not exactly true. Both countries represented their national interests very well, Bessent said. We both have an interest in balanced trade. The U.S. will continue moving towards that. One thing that we have seen not only during this time period. And so some of this sounds, listen, I know Chinese people, greatest people, most impressive people you'll ever meet. Their government is a real problem. Chinese culture, oldest culture in the world, maybe. We don't really have specific starting dates for their culture. They've been reading, for example, for a very, very long time in China, reading and writing way before we had it in the West. Incredibly impressive culture. Their government, big problem. So this idea that both sides are looking to seek an end to the trade war, I don't know if that's true. The U.S., because the U.S. knows they can win, and China, because the Chinese government kind of says whatever they need to whenever they need to say it, and maybe doesn't come through in the end. So we'll see. Speaking after talks with Chinese officials in Geneva, U.S. Treasury Secretary Scott Bessent told reporters that the two sides had agreed on a 90-day pause on measures that tariffs would come down by over 100 percentage points to 10%. Both countries represented. Did I already read that? Or they just... Bessent was speaking alongside U.S. Trade Representative Jamieson Greer after the weekend talks in which both sides hailed progress on narrowing differences. The Geneva meetings were the first face-to-face interactions between senior U.S. and Chinese economic officials since U.S. President Donald Trump returned to power and launched a global tariff blitz, imposing particularly hefty duties on China. Now, it was not just straight away to hefty duties on China. They were originally reciprocal. China reciprocated, the United States reciprocated again, and it was basically a pissing contest at that point. Since taking office in January, Trump has hiked tariffs paid by U.S. importers for goods from China to 145%, in addition to those he imposed on many Chinese goods during his first term and the duties levied by the Biden administration. China hit back by putting export curbs on some rare earth elements vital for U.S. manufacturers of weapons and electronic consumer goods, and raising tariffs on U.S. goods to 125%. The tariff dispute brought nearly $600 billion in two-way trade to a standstill, disrupting supply chains, sparking fears of stagflation, and triggering some layoffs. One of the interesting things about that has been that when you listen to some of the people who are supposedly much closer to this than average, one thing the Trump team seems to be leveraging is that experience with COVID. They learned an awful lot about the real underpinnings of the economy when they had to shut everything down essentially overnight. Where things could travel, where things can't travel, where you could get alternatives from and where you can't. All of these different little ins and outs of trade that we had to learn very, very fast. It seems some of the people in the government were taking note of that and now are leveraging those notes in this quote-unquote trade war. Financial markets have been looking out for signs of a thaw in the trade war, and Wall Street stock futures climbed, and the dollar firmed against safe haven peers on Monday as the talks boosted hopes a global recession might be avoided. So, all of this is very, very interesting. All of this looks to be a very, 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 very promising. The United States did lower the tariffs on China by the same percentage point that the Chinese lowered their tariffs on the United States. However, that means that the United States went from 145% tariffs down to 30%, because the original tariffs of 10% plus the 20% tariff on China, because Donald Trump is saying that this fentanyl stuff is a no-no and you have to do something about it. Until you do, here's a 20% fee. Then China is lowering their tariffs from 125% down to 10%. meaning that the United States still holds a 20% advantage in the trade negotiations, or is tariffing China 20% more, depending on how you want to note those numbers. Now, the stock market in light of this has gone absolutely wild. Things are up 3%, 2.5%, 5%, some stocks up in the 8% category. All of that because the tariff is 30% higher than it was just 2 months ago. This is one of the really wild things that we have seen. This is one of the really wild things that we have seen from Trump in his return to the presidency. He is I don't care if you hate him. I don't care if you love him. You have to admit this guy is a master of getting his message across. The idea from the start was, hey, we're going to put some tariffs on China. And everyone thought 10% tariffs, what a wild thing to do to China. That's going to crash the economy. All that talk was 3 months ago. 3 months ago. You can't tariff China 10% because you will wreck the world economy. Here we are. 2 months later, 3 months later, 30% tariffs on China, and the stock market is up 3% on the news. So if that's not mastering your messaging, I don't know what is. There are, like I said earlier, so why is this working? It appears that this is working for Donald Trump. This is working for the United States. This is on some level a massive win, if evidenced by nothing else than the fact that there are 30% tariffs on China and the stock market is up, right? If we can judge it on nothing else, we can judge it on that. Like I said earlier, there are reports of absolute mayhem in China. And again, I can't read the picket signs. I can't read the protest signs. If I am taking people at their face value, taking their word for it, these are people protesting because they've lost their job. I don't care if you are Xi Jinping. There's only so much of that is good for you. And a 90-day pause. So just like what Trump just did was convince everybody that 30% tariffs on China are a great thing, stocks go to the moon. What this does to Xi Jinping is it puts him in the precarious position of saying, okay, now we saw a little bit during the time that the tariffs were 145%, how bad things can really get. We saw just how terrible this can go. He's giving us this 90-day pause. Great. We'll assume that works for now. But the way you're keeping Xi Jinping honest is he knows Trump will go back to 145%. He doesn't care. With that impending doom on the horizon, Xi Jinping has this entire 90-day period to wait in fear of the time when that 145% returns. And hell, maybe Donald Trump decides it's 165%. What's 165% when you're looking at 170? 170, that's a little bit short of 203%. 203% is a perfectly round number. That seems to be the hammer held by the United States in this situation. Xi will not want the return of those incredibly high tariffs. It would be very, very bad. China right now, again, this is all by outside reporting. In China, they do not get to write about this, but we have seen the companies crumble that lead us to believe China is in a real estate crisis. A 2008 style real estate crisis in China, not the United States this time. This, from my memory, this goes back a couple of years. So compounding a 2008 style financial or real estate crisis with a manufacturing destruction, the likes that we have seen, on top of that could spell a depression, an actual depression. And that's not good for you when you're the only guy holding the hammer in the country. When you're Xi Jinping and you were the only guy, you were the guy everyone turns to for answers. When that happens, things go south very, very fast. So there's a real possibility that Donald Trump has given Xi Jinping this breathing room in order that what he can do is just say, look, Xi, there's some things we want. We're not going to be evil about it. We're not going to be extreme about it. But I got 145% in my back pocket, baby. How long can you take that heat? So it's possible that the Trump team, Scott Bessent, Donald Trump, etc., turn the screws on China to get some things out of this. I don't think they have the leverage necessary to get everything they want out of this, but some things I think are possible. Well, like what? What could the United States get from China? Well, the big thing, in my opinion, is that China would maybe start actually respecting copyright. There's a saying in business, R&D means research and development. Well, it does in the United States. In China, R&D means receive and duplicate. They do not respect United States copyright. That one thing alone could mean absolute dividends for every American, just respecting copyright. But on top of that, China does not buy or buys very little beef, poultry, soybeans, lumber. All of those things would boom the American economy if China took just 3% of their market, right? China goes through a billion pounds of beef per year. They just 3% take it from the United States. All of a sudden, that is a boom in the United States. What about liquid natural gas? I might be wrong. I don't believe China buys any liquid natural gas from the United States. I think they buy minimal amounts of oil. Both of these things would boom the United States economy basically overnight. That would be money coming into the United States and staying here. One other, as I was sort of researching this, one other seemingly small, but would be meaningful addition to this amount of trade. I guess China is very restrictive on agricultural machinery coming into China from the United States. I think that would be a huge boon for the United States, but also for China. The United States is very good at making this type of equipment. And it would be something that, so China's consumer loves top of the line stuff. They love Dolce & Gabbana. They love Tesla. They love Mercedes. They love all of that top line stuff. It's very interesting because after that, there's a lot of cheaper Chinese stuff. You look at the cars, you've got Huawei, you've got BYD, these manufacturers that sell $10,000-ish cars. And then Tesla sells the best-selling car in all of China, the Model Y. So there's a great disparity between what the Chinese consumer will buy. They will buy very, very cheap, or they will buy the top of the line. Is that a consumer aspect of China, or is that a philosophical Chinese dilemma? Meaning, is it just to look really, really good? the Dolce & Gabbana, the Tesla, Mercedes, etc.? Or is there a philosophy underneath it, meaning that really good American agricultural machinery would sell like hotcakes there to any farmer who could afford it? Likely it is more efficient on fuel, etc., meaning that it would be a boon for China as well. Less pollution in the air, all sorts of things. China has a real problem with pollution. But a bigger, perhaps, maybe not bigger, but equally, I think, in the culture war aspect of this. What if China opened their doors to a very heavily regulated Twitter/X or Facebook? That little bit of Americana that could get through would get through. And we have seen what Americana does around the globe. And you start thinking that freedom is pretty cool, maybe your economy changes a little bit. They are also very restrictive of the movies that come to China from the United States. So just for what it's worth, that could be up in the air. That is all I have for this video. If you like or appreciate what it is that I do here, hitting a like button really does help me out, as it tells YouTube to share this video with others concerned about the United States-China trade war. And if you find yourself here by chance but not design, this is the sort of thing I do on the channel. Consider hitting the subscribe button to stick around for more. And as always, I hope to have you back for the next one.